Welcome to day 84 of me backtesting my way to success. First trade was a win, and the reasons why I entered were this AMD cycle that you can clearly see right here. There's this accumulation or consolidation, then there's this manipulation and a distribution phase. And I entered at the manipulation phase on a impulsive move away from the volume area, so basically on a reaction with it. And my take profit was at the monthly open, which was also the weekly open, as you can see right here. The candle started right here and at the same point in the monthly too. So it was a really good TP, and also because of this strong volume area. So I like this TP very much. I was 100% sure that price was going to take out my first TP. And then I actually remembered the strat that my friend told me of that he currently uses. And it is just consolidation and an impulsive move away from the consolidation. As you can see, it reacted with the volume area, impulsively moved away. Then I used my Fibonacci from the swing low to the swing high of the impulsive move. And the golden zone fit with my first TP, like I said, really. So I was all the more sure that price was going to take out my first TP. And then I, for the second TP, I moved the stop loss to a break even once my first TP got taken out, because it may be possible that price reacts with the volume area, golden zone, and so I just thought that there's a possibility that price might shoot up, probably to this area, because there's this other strong volume area and this liquidity area. It would have made a lot of sense actually that price was going to go higher, but in the end the AMD let's say won. The AMD happened in the end and not the other thing that I just told you about. So a pretty good trade for the first one, and so let's just see how the next trade goes. Next trade was a loss, and the reasons why I entered were this daily fair value gap right here to our order block, as you can see right here. Equilibrium from the swing low to the swing high of the impulsive move away from the volume area right here. And then I wanted to enter, or no, I did enter on a break structure in the lower time frames, which I kind of saw as a impulsive move away from the volume area, because as you can see right here, this candle, it has a huge wick. So I thought this could be counted as an impulsive move, but I guess I was wrong. I guess this is where my mistake of this trade lies, because I entered on a, better break structure than just the impulsive move, which I was not sure if it was really impulsive. So I entered on the break structure. Take profits were the weekly open and the swing high of the equilibrium. Stop loss was below this volume area, which was below the 2-hour order block so I gave it a lot of breathing room, and yeah, it stopped out. And yeah, like I said, the reason as to why I lost was because I just misanalyzed an impulsive move which was not there, although it still kind of looks like that to me. So let's get on with the weekly recap. On day 78, I wrote down that I should look at the higher time frames before entering for a trade. On day 79, to be confident enough to place more TPs, or just be more confident in general when it comes to trading. On day 80, I wrote down that I should zoom out and look at the higher time frames. So basically just a thing of impatience, because, well, if I just look at the lower time frames and not at the higher time frames, it's kind of, at least to me right now, obvious that it is a patience thing. On day 81, I wrote down that I should give my stop loss more breathing room and be patient once again. On day 82, I wrote down that if price breaks through the volume area, then it most of the times means that it already got disrespected, because I want an instant impulsive move away from the volume area, not just, kind of going below it and then just maybe a bit consolidating, but not enough to take out my fixed range volume profile tool. So that kind of thing. On day 83, once again, being patient, and also I wrote down that the higher time frames have more power than the lower time frames, obviously, because I think it was like some high time frame confluence, but in the lower time frames, well, lower higher time frames, I think it was in a 1 hour, we had a AMD cycle, and I prioritized the AMD cycle trade, while the confluences in the daily or 4 hours was saying that we are going up. And today, of course, like I said, I should not mistake a break of structure at the volume area for an impulsive move. So I should take another look at volume area and impulsive moves away from it. That's it for today's episode. We'll see you in the next one.